Hello, everyone. Hi. Good to see you again for this market update and weekly watch list for next week, and also review of last week's watch list. It's been an interesting market in the last few weeks where S&P 500 almost finished exactly at the same point pretty much in the last few weeks. So that shows there is some kind of pause and indecision between the bulls and bears, and they're kind of sussing out who has the upper hand to go in one direction or the other. So like in most weeks, we have to keep a close watch anyway. Let's see how the market has performed in the last few weeks. Hope you can see the screen here. So this is the S&P 500 daily chart. So if I go to the weekly, make it full screen. So you could see look at the finish point. So right there, and there, and there. So the last 3 weeks is pretty tight. We tried to break out this last week, but it kind of came down again. So there is some kind of exhaustion there. So I wouldn't be surprised that if it comes down, maybe up to this point where it retests the 8 EMA, which is the T line. So that'll be 100 points lower. So that's a 2.5% down, which is not out of ordinary considering the volatility we've seen in the market. It's a bit extended from T line on the weekly, and also on the daily. If you look at it from the 50-day moving average, it is fairly extended. So, so expect some sideways or downward action over the next few weeks to come. Certainly the coming week. Going to the Nasdaq, similar chart. We had a doji week the previous week, and then slightly bearish week last week, pretty much like an inside candle to this week here, and it's kind of going sideways. It broke about this high 3 weeks ago, but it couldn't have the momentum to continue that. It's going sideways, which is, I think, in the broader scheme of things, is healthy to take a pause, because we don't want index to get too ahead of itself, and after exhaustion it pulls back. So right now it's kind of going sideways. So I would expect it to go sideways, maybe come a little bit down, test the T line on weekly, and then set up and move forward, which can be quite positive for the longer run. Dow Jones Index, similar pattern as well. So we had a hammer symbol the week before last, and then an inside week last week. So the high and low of last week candle is within the previous week candle and the week. So that's inside week last week. So if it breaks below that inside week, that's negative. It breaks above, then that's positive. People sometimes trade using that inside candle pattern, using the stop loss on the other end of the range. So if you're selling the index, sometimes people use it as the inside week candle. Sell when it breaks below, have the stop loss there, and vice versa if you're going long. It is also a bit extended from the T line and the 50-day moving average. It is consolidating a little bit, allowing the 21-day moving average and the 50 EMA to catch up a little bit. This looks a little bit better than the S&P 500 and Nasdaq because of the kind of consolidation pattern that's been going on for a few weeks. But along with the other two market, my expectation is it goes sideways or down a little bit. It could come down to T-line and test, and then can thrust up again, moving up forward, depending on the market sentiment. So that's how the broader market index is done. Moving on, this is the IWM, which is the Russell 2000. Again, it's kind of consolidating nicely. T-line tried to come down below a few times, but it hasn't closed properly at all, decisively at all, below the T-line on the weekly, which is encouraging. Look at the daily. So the moving average is confluence is coming here. So we would want to see if the price finds support at 50 EMA like it did here the last few times. If it did and rebound and breaks about this high, then that is positive, and that signifies another uptrend resuming. If it breaks down, then that is not very positive at all. That means the market needs more time to settle down, and that may be more stocks kind of giving up its base and breaking down. So that is a key level to watch on in IWM, the Russell 2000 index. This is so that's the Forex, so we don't want that. I'm not actually following that. So this is Bitcoin. Let's start with the daily. So it pulled back quite a lot, and we sold out somewhere here. It tries to find some support right there at this level, came up about the 50 EMA, and it's finding some resistance at this point at 58,000, $321,000 in BTC USD. So if this finds support at this point where the moving average confluence is there and recovers, that signifies, and then breaks out of this mini resistance, that signifies a new option coming up and can give you a viable option. If you look at the weekly, it came down decisively on higher than average volume these 2 weeks, but then it kind of recovered almost all of it in just 1 week, albeit on lower volume. So I'm slightly watching this low volume recovery and high volume pullback, which is not positive, but Bitcoin is in the trend, and on the daily, it's kind of encouraging. If it goes sideways and recovers after this high, then that could give a new signal. I'm watching a couple of indicators to trade cryptocurrencies, Bitcoin and Ethereum and so on. And based on that, I might get a buy signal quite soon on Bitcoin. So this is Ethereum. So I bought it a few times here. I'm still having a trade active. I bought this here on this breakout and also on high volume. Also had a confirmatory MACD signal. I bought it. I'm still active on this trade, and I'll be continuing this as long as it is positive based on the MACD indicator. So let's go to our actual watchlist stocks from last week. The first one was F&D, Floor and Decor. So this is the daily chart. So daily chart, it closed on high volume, not higher than average, but higher than the previous week's volume, and closed decisively below the T line. So if you're trading on the stock and have an active position, this is a cause of concern, and unless it recovers, opens positive and recovers on Monday, this needs to be held very tightly and possibly get out of this trade. That's what I would do if I bought this trade as a swing trade option. Looking at the weekly, you could see it kind of tried to break out and then pulling back. It's a bit extended, and hence it's doing that. It had a big move. The large uptrend is still in place. It could come down here or go sideways, find some resistance, support at this previous resistance level, find support at a T line on weekly at 106, and then could go sideways and then go up again. So it depends on how you trade, whether short-term, medium, or long-term. The long-term, this stock is still positive. However, if you're swing trading, then I would say using the CT50 strategy, it has given a kind of a potential sell signal here. Hello. We don't have a sell signal yet, clear cut, but it gave a hammer and a bearish candle. It's still about T line and key moving averages are in the right direction. You might remember, I think I mentioned last week that it's pulled back quite a lot and run ahead. And I would like to see a handle or a base setup. And I think it might do that in the forthcoming weeks. So weekly chart is a little bit extended. So keeping a watch on that. It could pull back, but on the daily, I think it's sitting at the support level. If the support breaks at the T line, it could come down to the 21 EMA right here. Let's see how it goes. And if it sets up a new base, the earnings are coming up, so that could decide which direction it is going. It's just another week, so I would expect that it goes sideways or slightly lower until the earnings, and depending on the earnings number, the stock will react accordingly. MKC. So broke out of this, so I put a channel line here. I broke out this channel right there, and it came down. Right there, it came down. And it broke out again a couple of weeks ago. It came down, but finding a support at 50-day moving average. The 50-day EMA is also kind of turning upwards. So it seems like it's finding a support right here. If over the next few days it breaks about this mini resistance and also this one and held this 50 EMA as support. That is encouraging, and it could signify a new uptrend. So I'm fairly positive. It's a slow-moving stock, but positive on this name. If you want a slow-moving stock on a positive chart, so this might be a good contender for that. For medium term, you could place a stop loss right there, kind of around the middle of this range, or you could also place a stop loss below this low, or if you want to play, have a tight stop loss just below the 50-day moving average, right around 88.50 kind of range, or 88.80 level. So you have a very tight stop loss. If you look at the weekly chart on this one, this is how it looks. It broke out here on higher than average volume, tries to pull back, came down to the channel line and 50 EMA. There's a confluence of moving average here. T line, 50 and 21 EMA on the weekly that acted as support. The T line is still below the 50. It's likely, if there is no major negative reaction to the stock price next week, the T line is likely to cross above the 50 EMA on the weekly, which is another positive indication. So if it does that next week and goes above 91.60, that is a good place to re-enter with a stop loss around here or 88, which gives a good risk-reward ratio. We can easily expect, I think, if the economy reopens, as many are expecting, to go to 100 or just over that. ALB. So this is weekly. I said there's a potential breakout here, and the very next day it broke out of that level, and it's kind of went sideways and tested, and the T line caught up, and it's taking that as a support. I have initiated a trading position on this one, not a long-term investing position, but a trading position on this one to see how it goes. I bought it somewhere here. Earnings are coming up in the next few days. When is it? Wednesday, it seems. So if you have a good profit cushion, you can hold on to that. If you don't have much profit cushion, have a very tight stop loss, or even to play it safe, we can partially close the trade or fully come out of the trade before the earnings, depending on your earnings strategy, how you want to play that. But right now, I'm holding this to see how it reacts on Monday and Tuesday before the earnings on Wednesday. It also has a longer term breakout level at this point. Go to the monthly. Where is it? Right here. So 145 range, it broke out, retested, and then going up again. Okay, next one is AMAT. Let's go to the daily. So I said there's a potential buy here, stop loss. It broke out of that, but it tapped down below T line and 21 EMA. On the daily, it tries to come back on Friday, but T line and the 21 EMA acted as resistance, and it closed below those two key moving indicators, which is not very encouraging. So if you have this trade, I would probably close it off or move the stop loss just below that low of Friday's candle, rather than waiting out for this one. The volume has been low, but also increasing on the down days. So it probably needs a little bit more time to settle down. CWH, start with the weekly. So this is the camping world holding. So when the economy is reopening, people are camping and things like that. Those products will be in demand. Its earnings are coming up on Tuesday, so that is to be seen. It did have a breakout prior to earnings on increasing volume, albeit below the average level. This breakout level still acts as support. So what I'm expecting, based on this kind of dodgy pin bar candle, negative to some extent, what I expect is to pull back a little bit, maybe go sideways, not a heavy pullback. I hope the pattern doesn't break down. Find some support at this previous resistance now, could act as a support, and also T-line, and recovers based on the earnings. I haven't bought the stock, but if I'm looking at this to buy, I'll be looking how it responds towards the earnings over the next few days, and whether these levels act as a support or not. That's what I'll be looking at. Have support. So one of the long-term winning stocks, it tries to break out of this level here, but then it pulled back. And that has been the case in many of the stocks as well. Last week, many of the big caps, large cap companies did this. Apple, Shopify, and a few others also did that. So it seems to do that. This earnings is not yet there. It's coming up in 3 days' time. So that will define which direction it's going. It has already had a good move. 50-day EMA will be a good support point to look at. I wouldn't buy at this point. I would want to see how it responds to earnings. And if you did buy it, it's useful to keep a very tight stop loss or exit and to see what happens at the earnings point. So this is the last week's watchlist stocks. Let's move on to the next week's watchlist stocks for the week starting the 3rd of May. In UK, it's a bank holiday, but I think in the US, the market is still open. So check it out. So Crocs, so it's a footwear company, manufactures various footwear, slippers, and so on. It had a good earnings, and you can see the volume there. Let's go to the weekly, and you will notice this volume is the highest in many months. Since October, this is the highest volume. And the last week, it had moved nearly 19%, breaking out of this multi-month range. Highly positive chart. It's a bit extended. If you buy it here, then you had to put a stop loss somewhere at 88, so that's about 20% stop loss. Market do that with half a position, that makes it 10% stop loss, which is not too bad. But look at the daily in that case. If you've been watching this stock and the earnings, and you know that it gapped up, and people sometimes buy it here with the stop loss just below that day's low and see if they can ride the trend. What usually happens is after a few days of going along with the trend, it sets another base, allowing the moving averages to catch up, and then resumes its uptrend. So that's what would be a good strategy right now if you're looking to enter this stock. See what happens if it goes sideways, which I expect it does, or comes down a little bit, as long as it doesn't kind of break down this pattern and go below this kind of pre-earnings low, then that is fine. And it if it sets up a consolidation, a mini base here, and then tries to recover on breakout, you could use that consolidation base low as a stop loss and the breakout as an entry point. Certainly there seems to be a change in investor sentiment and a good breakout. If this breakout held long next week, good one to have on your watch list. TDC, let's go to the daily first. Earnings are not there yet, but it had a gap up move on some kind of company specific news, and it continued. It's pulled back a little bit, and you see it still hasn't even touched the T line yet. So it could find some support at T line or somewhere in this range. If the market is slightly bit weak, it could come down to this previous resistance level around 45.27. So look for some support between 49.47 and 45.27. So in that $4 range, and then when it recovers, depending on the earnings, which is coming up in 4 days' time. So keep a lookout for that. Earnings can determine. So last time when it had earnings in February, it had a big gap up, and it never undercut that low here. It had a move already pre-earnings, so you'd want to see what happens with the earnings. If it sets up nicely, you can start a position and then respond according to the earnings reaction. UPS. Another fantastic earnings. So this is playing up on the economy reopening play. Lots of parcels and deliveries are being made. So great numbers, beating analyst estimate, and hence you can see it kind of had a kicker symbol here and a huge gap up, 10% gap up. And it didn't even consolidate, it just kept up and up and up. So high volumes for 4 consecutive days after the earnings, which is fantastic. So let's go to the weekly. Look at that one. So it moved nearly 14% for the week because of the great earnings reaction. And that weekly volume is the highest in nearly a year. In 1 year's time, that's the highest. So that is really significant. And volume clues suggest that it's very likely that this move to continue. And it also broke out of this multi-month cup base here, right at this 177 range. It's a little bit extended, fantastic chart. I would probably buy this at some point. What I would like to have is a good risk-reward ratio. So I'm expecting that the price may be moving sideways or slightly pulls back towards 190 level. So if the price comes between 190 and 200, I would want to enter that with a potential stop somewhere at 170, 168, that level below the weekly candle. Right? So if it comes down to 200 and 170, that's about 15%, 14-15% stop loss. So I would probably go a little bit less than my full position on this one if I'm trading it. Good one for investment as well if you're looking for a long-term investment name, UPS. So Nucor, this is I think it's a steel company, right? So because of the talks of Biden administration planning for infrastructure bill, a lot of spending likely to come in US for infrastructure projects. So steel would be in high demand, and it has recovered nicely from the coronavirus low. And you can see here for the last month it consolidated, and then it pushed up again on high volume on earnings as well, which is good. So the trend is there behind the infrastructure plays like steel, and the stock is also good. So it had the earnings on 22nd, and it recovered, setting up a nice base here. There is some kind of resistance, small resistance at all-time high level of 83.5. If it breaks above that next week, then that'll be great. So I'd want to see this pattern. If you put a draw a line here at 83.58, if it breaks above that, then that is a good one. And if you're entering that, the ideal stop loss would be somewhere here at 75. That gives you about 10% stop loss. All go. So it had a gap up. The earnings are coming up in 10 days time. So you have a week before then. If you draw a horizontal line, let's move this line there. So you can see if you draw a horizontal line there, it broke out of the descending trend line and out above the T line and closed positive on high volume, which is good. So that is a very good chart to buy even now. Only thing is that it closed below halfway mark of that candle. If it had closed out higher, if the body of the candle is too high, if properly high and less wick, then that would be a bit more encouraging. If you look at the hourly chart, for instance, pull back and setting up, so it didn't sell off at the end, but on low volume. So if it holds and slightly recovers and goes above 22.50, price currently is 22.36. So if it goes above 22.50, I'd want to buy this, because the stock chart is really good, and the stop loss would probably go somewhere here. Again, it is about 10%, 15% stop loss. So planning your position sizing accordingly. All right. The next one after Argo is PBF Logistics. Had a big base, a handle, and on earnings broke out. The volume is not above average, but the volume is higher than the previous 6 weeks, 5 to 6 weeks, and it closed the highest close in many months, in nearly a year. Highest close in many years, higher volume in previous 6 weeks, good earnings. So a lot of things are acting in favor. The 50-week moving average is also turning up. If you look at the weekly, there's a mini base here, and that's the handle I showed on the weekly, and it broke out a couple of days ago on earnings and followed up on the following day, yesterday. That's a Friday, sorry. And there's this confluence of moving average as well. So for a tight stop loss, you can place a stop loss somewhere here about $14 or $14.15 or something like that. So that's a good one to consider for your portfolio. Good chart. I like this chart. And the last one is AMEH, Apollo Medical Holding. You can see here that it broke out of the previous 8-week structure on higher volume. Good candle. It hasn't pulled back a lot in the weekly, but on the daily, it is giving us an inverted hammer symbol. The earnings are coming up in 3 days' time. So although the weekly chart is really positive, good breakout on volume, I would be slightly bit cautious because of the earnings coming up, because earnings can go either way. It moved in anticipation of the earnings. Earnings sometimes kind of follows that pattern and then gaps up, but it's a bit of a speculation there. If you've got other patterns which we have gone through, that is much more safer option. It's better to consider that. So although AMEH is a good pattern, good chart pattern, if you want to try it, you could with the stop loss somewhere around 27, just below the T line. I would place it. So that gives you about 10% stop loss, but beware of the earnings coming up. That concludes our weekly watch list names. So let me go through that again. AMEH, PBFX, Orgo, go to the daily chart. Orgo, Nucor, that's the steel one, UPS, EDC, nice pattern there, and Crocs. Okay. Good earnings gap up, allow for some for it to cool down, setting up a base and recovering, and then you can enter it. So that concludes the watch list for next week. So you can see there are lots of setups coming up, right? Market slightly is a bit extended, as I mentioned, with the index. Wouldn't be surprised if it kind of goes sideways and pulls back a little bit, but play it safe. There are fantastic setups coming up. You don't have to buy every stock that's out there, that's been discussed here. Look for the best entry point, look for the best position sizing and the risk reward. And there are quite a few in our watch list that I've just spoken about that ticks all the boxes for them. And I will be opening a position from one of these stocks in my real money portfolio as well later today. So those who have subscribed to Real Money Portfolio, the VIP portfolio, or upgraded to that, you will get to hear what I'm buying one of these stocks from this watch list today. All right. Happy learning, successful investing. Hope it was useful, and I see you in next week's video. Bye-bye. Take care of yourself.